The code is immutable. The money is
The Genesis locked to the edge of the mempool. We are decoding Bitcoin's signal in the noise. Privacy, self-custody, censorship resistance. Welcome to the revolution. This is OnChain Revolution.
Welcome back to OnChain Revolution. My name is Yagobi, and I am the host of this show and this channel. Welcome back. If you're new, welcome to the channel. Welcome back to my TikTok audience as well. You guys have been amazing. And then welcome to my abstract audience as well as my Zora audience. Now I need to get them connected here very quickly. Sorry, guys. Give me a second here. Okay, they are good to go. So put your comments and questions in the chat and I will get to them. And then to my YouTube and X audiences, on the YouTube side, smash that like for me. Subscribe to the channel if you're new, if you like my content and my style. And then on X, let's get as many people in here as possible. But today's main topic, main question is people are wondering, is Bitcoin and ETH going to continue this rally or are we going to see more pain? And I have my answer to that, or how I feel in my position. I feel very confident about that. And I'm going to bring up some data here eventually once we get to the main topic again here and show you guys why I think the way I do, because we have been really focused on that weekly chart and we will get back to that as well today. But we're going to also get down to the lower time frames as well to kind of give more support to that. But before we get into that, we are going to do what we always do, and that is start off with a market pulse, right? Let's see what's going on with the markets, and we're going to hit on some kind of headlines that could be, the reason why the markets are the way they are, right? So let me get my screen shared here, and as you can see, Bitcoin is sitting at 69,500. Right. But if you look here at the stock market, we'll start off there. You can see S&P is up 0.51%. And then you got NASDAQ up 0.6%. The Dow Jones up 0.13%. The VIX has pulled back. It's a negative 2.48%, meaning that volatility is calming down. Right. So that is a good sign. You're also seeing the DXY, which is a basket of goods that, backs the dollar. It is pulling back to 0.83%, which is good for risk on assets. And then you see the Russell 2000 up 0.4%, which is another risk on area. So that is good for risk on assets, seeing that being in the green there. And then you see the Magnificent Seven here up 1.2%. And some of these, stock giants, NVIDIA up 3.54%, Google up 0.56%. You are seeing Apple pull back 1.8%, along with Tesla up 1.8%, and then Netflix down 1.6%. The futures are in the green. And then you can see here, crypto seems to be the only asset class that is in the red overall. You see Bitcoin pulling back 1%, 1.1% here, and then ETH pulling back 1.39%. Right. So and then finally, to wrap this up, you see the precious metals looking strong with a strong rebound here with gold up about 2% and then silver up 6.2%. So gold back above 5,000. So that's really good for, the precious metal bugs there, as well as silver back above 80. Right. So overall, the market seems to kind of have this showing a bit of strength. Right. Crypto is a little bit behind in terms of the strength. Everything else seems to be green. Crypto's a little bit in the red. But if you look at the price and what happened last Thursday with Bitcoin pulling back to 60,000, it actually does look pretty strong if you think about it, right? Now, let's hit in some headlines real quick. So some key economic events this week to look forward to. Monday, which is today, December retail sales data is coming in. Wednesday, you're going to see the January jobs report, and jobs have been a pretty, heavy topic recently with data not being very, very good, right? Then you got Thursday with the initial jobless claims data, January existing home sales data as well. So this is going to be a catch up from not providing that data, the government not providing it last Friday because of the partial government shutdown that happened. And then we'll get the January CPI inflation data as well. And there's going to be some events where Fed speaker events, about 5 of them, and we'll see if there's going to be any sound bites that kind of either help the markets or crash them. So this is the calendar, right? I think the jobs data has really kind of already been assumed what's going to come, right? I don't think many people think it's going to be good data that comes through there. And then let's hit on some other quick topics here before we get into the main topic of where Bitcoin and Ethereum is going to head. China has ordered banks to immediately reduce U.S. Treasury holdings, right? This is not a good headline, and it shows that China is not having confidence in these Treasury assets, right? That they've been heavily involved in. So this is something to keep your eye on to see if this, has a negative effect of the overall market. You're going to see this, if it does have a strong effect, probably go into the stock market initially and then trickle out to crypto. And then you can see another bad sign here is that Google searches for crypto are hovering near a 1-year low, signaling fading retail interest as market sentiment stays weak. So this is something that we tend to look at quite a bit in the crypto space, is to see how many people are searching. And it's been pretty weak, I would say, in 2025, considering it was a post-halving year, right? And we are at a 1-year low right now. So it's still institutions that are really here in driving the capital that is going into crypto, right? And so this is not a good time, but we are in a bear market, so we know at some point that this is going to turn around. And then the good old fear and greed index yesterday it dropped to 7. Right, so it doubled yesterday, and but I do think it bounced back to 14 right now. But we can't get out of extreme fear right now, it seems like. But if you've been listening to the show, you've been watching the show, I personally feel like this is a great time for opportunity. And I know that's hard to hear for a lot of you guys because you're like, what are you talking about? It's been down only. I feel like everything's just been crashing constantly. But if you have true conviction in the space, then you've been somewhat responsible, have stable coin on the side. This is the moment when you can really start to look and say, hey, is this going to be an area of the lows for the market before we rise up into the next cycle? And so that is how I look at the extreme fear area that we're in right now. All right, we got some chat comments in the chat. GM from Superfan. What is up, Superfan? Can't wait to jump on that call later today. Dr. Min says GM. We have Innovative First Media. What does your intro say? Did you make old intros? This one. And then we got, what else here? We got David Nash says, hey, Spotify listener, first time live. Welcome to the show, David Nash. Almond Joy says, GM, first time here. Welcome, Almond Joy, to the show. And then we got Monty Bonds, is it you? And then here we go. All right. So it looks like Bitcoin is showing some strength, kind of start this next week a little bit, right? But I am going to start off with the weekly chart because that is what I've been using to kind of gauge, when Bitcoin could potentially stop the bleeding, right? We have used the moving average indicator the past, I want to say 3 or 4 shows, and it has been pretty solid in terms of where Bitcoin could be heading, and then also gives us some insight in terms of the next couple of weeks, 2 to 4 weeks, right? So as you see here, last week we were trying to figure out when Bitcoin would start heading to the 200 moving average, right? And you can see it almost got there. It pretty much did. I feel like we were right there, right? And this was Thursday whenever Bitcoin hit that $60,000 mark. And then it was quickly bought back up. You saw Bitcoin really kind of rally to all the way to really, I think it was 71,200, which was, I want to say yesterday or maybe late Saturday, right? And so then right now we're sitting right here at the 69,100, and people are trying to figure out, okay, what's going to happen? We're sitting actually at a support level for Bitcoin. But if you look back here, and I've talked about this before, the previous bear market, and you see that when Bitcoin actually got to the 200 moving average, it followed up with another candle that kind of just hovered right around it, right? So it got bought back up a bit up here to this $3,600 mark, and then it worked its way back down. And then you saw a strong green candle following up with that the following week, right? And then that's whenever you start going sideways back and forth, kind of, I felt like they were a bunch of dead cat bounces and then worked its way back to the 200 moving average, okay? So now we are in the beginning parts of that, right? So are we going to have another red weekly candle that gets us close to the 200 moving average, or are we going to have that kind of dead cat bounce continuation rally from the later part of last week and then finishing out this week, possibly, potentially, best case scenario, getting to like 75 to 78,000? We're going to find out very quickly. And for us to get a feel of that, we need to work into the lower time frames, okay? So what we're going to do is we're going to move from the weekly to the daily time frame here. All right, so you can see here that on the daily time frame, we can really see where this support level is, right? So we've been able to hold the 68 to $69,000, right where we are right now. We've been able to hold that support and not fall below that since the 7th, right? So we're talking about 2 days ago. So we had Thursday happen, and then it rallied back, and then we've been able to hold the support level right at 68.5, 69,000. Okay, so now let's take a look at the momentum indicators. So you see the MACD here that has been extended out in sell pressure since January 20th, right? So it is starting to show some cracks here, and you're starting to see this fast blue line start to curl up a bit, right? So this gives me the thought that, Bitcoin is starting to come out a bit of this sell pressure momentum that we've been stuck in since the 20th of January. Now, that I want you guys to be cautious when I say that, because it doesn't mean that we're, in the next day or two that we're just going to come out of this and go into buy pressure. That's not what I'm saying. What I am saying, though, is it is starting to show some signs that there is a potential, buy pressure session, and maybe the next week or so, right? So we could have a situation to where we have a continuation to the downside, and then it picks back up next week, okay? All right, so the stochastics also is starting to show that we are getting halted right in the middle of the RSI here too, right? So we got to like that 50-point mark, and then we stopped right here. So it's giving us a little bit of some mixed signals here. But the one sign that I do see is that it is showing to break down the sell pressure session here. So if I were to give, the feel that I get right now is that Bitcoin wants to come out of this, maybe continue this rally a little bit, get to 70, 72,000, possibly get to that top percentage rebound level of 25 to 30% from that $60,000 mark where it crashed, which would be best case scenario after it, I guess, for a dead cat bounce, right? And so that's where we would see it rally possibly this week to something like 72, 73, up to like 75,000. Maybe best case scenario, you would see something crazy up to 78, right? So that's what the daily's telling me. Now let's dig even deeper here. I'm going to go to the 12-hour chart. The 12-hour chart has started the buy pressure session already, right? So you can see these green MACD candles that have formed, and they're very, very weak though, right? So it is kind of telling me, okay, these indicators really want Bitcoin to kind of push up, but it's not, we're not getting strong buy pressure on the 12-hour chart at the moment, not yet, right? But that can change if there's some strong headlines that come up, and then we go into a strong buy pressure session. All right, let's take a look at the 8-hour. So on the 8-hour, it's showing a little bit of weakness here on the MACD. The green candles on the MACD are starting to weaken a bit here too, right? So, whenever you see like that daily is ready to come out, sometimes what you do is you go down to a lower time frame, like the 12-hour or the 8-hour, and it gives you the answer that you're looking for, right? So I was saying, okay, it looked like the daily wants to break down and it wants to go to the upside. And then I go to the 12-hour and it's showing that it's already in buy pressure session, but it looks weak. And then you go to the 8-hour and it's been in buy pressure session for a good amount of time and it's starting to crack out of the buy pressure session. So that tells me that maybe that daily chart, if we go back here to the daily chart on Bitcoin, it's just not ready at this moment, right? Because you can see on the lower time frames that the ones that are in buy pressure session, they're very, very weak. So I think what the best kind of, I guess, data to look for is what happens today and tomorrow with Bitcoin, right? Does it have this fake, strength to the upside a little bit, and then the 12-hour, 8-hour gave us that data and said, hey, this is kind of like a fake pump? Because that's what seems to be the case, right? So that's why it's important to use multiple timeframes and go, to a point to where you can try to get the answer from the data that you're looking at. All right, so for me, that's where I'm at right now with this specific situation with Bitcoin. I feel like we get today's kind of price action, we get into tomorrow, and we see, okay, can it get past the resistance level? And that resistance level, I think, is very, very important for us to pay attention to, and that is 71,800, right at 72,000 is that resistance level. But if it breaks above that, then we know that that's where the strength comes in for Bitcoin. So it's really tough right now to kind of determine, okay, what's Bitcoin's next move? Because even though the daily looks like it wants to complete that breakdown of the sell pressure and wants to go to the upside, the lower time frames are telling us it's not ready yet. All right, so let's take a look at Ethereum. All right, so Ethereum on this weekly chart is sitting at, so the price right now is sitting at $2,000, right? And we've kind of re-entered that area on Ethereum where we used to call home. If you watch the show, Ethereum Getting Home is this area to where we were waiting on Ethereum to get to before it can kind of bounce back to the upside, right? And if you go back to March of 2025, you can kind of see these low areas here where it reached that, right? So if you see the candles to the downside, you had Ethereum reach about $1,500 in April of 2025, right? But when it wicked all the way down to, 1,400 on, and this was April of 2025. Okay, and then once it reached that level, it started to work its way back up. And we already know what happened with Ethereum in May. April, May, it worked up to that $2,500 area, and then it worked its way up to $2,800. And eventually we got to that all-time high for Ethereum, which was $5,100. And this was in August of 2025. So August last year is whenever it reached that, right? So we're in that zone for ETH, kind of the home zone, right? So right now we're sitting at $2,000, and does it have further down to go? The biggest difference between kind of us being in that region now versus back in, I think it was April of 2025, was we were all waiting for it to get there, right? And we knew that once it did get to that area and it started to move back up, that was the next strong move to the upside, right? We're in a situation to where that expectation isn't the same, right? We're not saying, okay, we need ETH to get to this area so it can start to propel to the upside and work its way to the upside. But one historical data point is if you go back to the bear market of 2022, and you see kind of when ETH started to go into those areas, right? So the first time it went to its home in 2022 in the bear market, it lasted about six weeks, right? So you're looking about 42 days. And the second time, which is kind of where we are right now, it lasted about 8 weeks, which is 56 days. So if we were to put that same time frame on ETH, where we are right now, to the 56-day period, that would take us to March of this year for when ETH would start to move to the upside, right? So there's a lot of speculation about the ISM and the manufacturing PMI, right? And how in January we reached 52.6, and how this is like an indicator of when alt season really starts to kick off once that PMI gets into the high 50s and low 60s, which is absolutely true. If you look past historical cyclical data, that is whenever alts really started to be aggressive to the upside. There was a strong correlation there. Now, if that's the case, the way that the PMI right now, the ISM PMI is, and if it has that continual upward trajectory, that kind of puts us in that same time frame around the beginning of March, right? But with that being said, I still think that like we're in a bear market. I think that this past bull market, we just didn't get an alt season. So I'm in the camp that believes that if ETH does have a drive back up in beginning of March, it's going to be I feel like it's a very low percentage chance for that to happen, just because the timing that we're in right now, plus if you look at Bitcoin and where it's at and where it's been, even though the ISM PMI looks like it's primed to the upside, I just feel like, ETH right now is it's going to follow Bitcoin. It's been following Bitcoin ever since the summer, ever since it hit that all-time high. It's really been following Bitcoin's trajectory, right? So, even if it has a little bit of life and risk on gets more bullish, I think there's going to have to be some strong major events, headlines, to cause risk on to go to the upside. I think that's going to have to be really aggressive, maybe rate cuts or something from the government that is going to be putting stimulus out there, or more liquidity out there from the Fed that's going to be very, very aggressive to the upside. Because right now Ethereum is following Bitcoin to a T, and I don't see Bitcoin really recapturing the 50-day moving average until Q4 at the earliest this year. And so that's what's keeping me a little bit hesitant. But that doesn't mean that, after 56 days, Ethereum doesn't work its way back up a little bit, right? Because that's kind of what you saw here. It did have some strong candles, and it worked its way back in 2023. And this is when Bitcoin started to kind of move up a little bit as well. But it didn't get aggressive until late 2023. Right. So Q4 of 2023 is whenever it started to get pretty aggressive here to the upside. And that makes sense because that matches up with what Bitcoin, a lot of people are projecting for Bitcoin to do as well. So that is where I'm at for Bitcoin and Ethereum. I feel like, they do have an opportunity kind of for their next move here, bounce up. But I do think that Bitcoin's going to revisit that 200 moving average. Or at least kind of head back towards it multiple times in the next 2 to 4, 5 months. All right, let's see here. Let's get into some other news here. So let's talk about some ideas of what potentially crashed Bitcoin. Okay. This is a topic that a lot of people are talking about. they're trying to figure out what crashed Bitcoin to that $60,000 level. I felt like, I had a pretty good guide for Bitcoin with using the weekly chart and felt like it was going to get to 60,000 regardless. But there are some people on crypto Twitter that have some ideas and some theories behind it, right? And you can see here in this article where it says, and this is an article by Cointelegraph. We can get into this. It says, what crashed Bitcoin? 3 theories behind Bitcoin's trip below 60,000. It says Hong Kong hedge funds leveraged Bitcoin's price bets are emerging the main trigger behind Bitcoin's sharp month-long sell-off. Bitcoin experienced one of the biggest sell-offs over the past month, sliding more than 40% to reach a year-to-date low of 59,930 on Friday. It is now down over 50% from its October 2025 all-time high, near 126,000. Key takeaways. Analysts are pointing to Hong Kong hedge funds and ETF-linked U.S. bank products as possible drivers of Bitcoin's crash. Bitcoin could slip back below 60,000, putting the price closer to miners' break-even level. So that's a big topic too right now. Are miners breaking even? They're close to it, right? And that is a big concern. So a lot of Bitcoin miners have been, pivoting to AI because it seems like that's where they're making a lot of their, that's where the opportunity is for them right now. But let's continue on here because I do think Bitcoin can potentially slip back below 60,000 because if you look here, it broke below the 200 moving average in 2022. We saw that happen. Now it broke down 33% below it actually. And this is after the COVID situation, right? So we knew there was a lot of money in there, which created a bunch of buying. And then you see here where, overselling happened, right? So can that happen right now? I think that's definitely on the table. If it does, I don't think it's going to be as aggressive as previously whenever it was pulled back 33%, right? This time, if it pulls underneath, I could see something probably maybe max 10% pulling down. But anyways, let's get back to this article and see kind of where their thoughts are on that. Okay, so that's where kind of people are asking that question, can it go below 60,000? But then you go back to the Hong Kong hedge funds and, you can see, it says one popular theory suggests that Bitcoin's crash this past week may have originated in Asia, where some Hong Kong hedge funds were placing substantial leveraged bets that BTC would continue to rise. These funds used options linked to Bitcoin's ETFs, like BlackRock's IBIT, and paid for those bets by borrowing cheap Japanese yen. Interesting. According to Parker White, which is the CEO or COO/CIO of Nasdaq-listed DeFi Development Corp, they swapped that yen into other currencies and invested in risky assets like crypto, hoping prices would rise. And it said when Bitcoin stopped going up and yen borrowing costs increased, those leveraged bets quickly went bad. Lenders then lenders then demanded more cash, forcing the funds to sell Bitcoin and other assets quickly, which exacerbated the price drop, right? So, these Hong Kong hedge funds seem to really get really risky because they saw that Japanese yen was so cheap that they use that to leverage for these, crypto assets. And I think they also went into some other risk on assets as well. All right, so that's the first theory here. And then the second theory is by Arthur Hayes. So it says Morgan Stanley caused Bitcoin sell-off. Another theory gaining traction comes from former BitMEX CEO Arthur Hayes. He suggested that banks, including Morgan Stanley, may have been forced to sell Bitcoin or related assets to hedge their exposure in structured notes tied to spot Bitcoin ETFs, such as BlackRock's IBIT. Seems like BlackRock's IBIT continually gets linked into these theories, right? But so he's basically saying that banks were forced to sell Bitcoin to hedge their exposure, right? So institutions is the second opinion here that caused it. And he actually tweeted, it says Bitcoin's dump probably due to dealer hedging off of the IBIT structured products. Again, IBIT is just, man, I don't know if that is a good thing or a bad thing for Bitcoin, right, in the price action in the future. It goes on to say these are complex financial products where banks offer clients bets on Bitcoin's price performance. And then it says right here, dealers must delta hedge by selling underlying Bitcoin. So basically they're forced to sell their Bitcoin to kind of get out of those tight spots. And then the last topic here is, or the last opinion of why Bitcoin crashed to 60,000 is miners shifting from Bitcoin to AI. Less prominent but circulating is the theory that a so-called mining exodus may have also fueled the Bitcoin downtrend. In a Saturday post on X, analyst Judge Gibson said that the growing AI data center demand is already forcing Bitcoin miners to pivot, which has led to a 10 to 40% drop in hash rate. So this is kind of a concern, right? I mean, at least from the headline perspective, because I don't think long term that this is going to be an issue. I think there's enough participants for Bitcoin mining, but it's something to create FUD and to create people to sell off, right? So those are the top 3 reasons that people believe, Bitcoin crashed to those levels on Thursday. All right, this next topic here, centralized finance captured $20 billion of the $35 billion invested in crypto in 2025. So this is pretty crazy stat because more than half of total investment in the crypto last year was basically financial institutions, TradFi. Another great article by Cointelegraph here, which says crypto banks, actually, it's not bad. This one right here. Centralized finance captured almost 20 billion of the 35 billion invested in crypto in 2025, driven by rising adoption and stricter regulatory requirements. RWAs and stablecoins attracted capital as investors prioritized scale, compliance, and real revenue, while GameFi, NFTs, and social saw funding fade. So you can see here by the month, right? Almost 150 billion in 2025 in January, which makes sense because a lot of people were bullish in those early days. I'm sure a lot of institutions and VC investors were excited that this new administration was so pro crypto, and so a lot of money came in, right? And you could see as the time went on and the sentiment of the space continued, it just continued to the downside, right? In February, it started going down a little bit, and then March as well. Then you hit kind of like this low in the spring in April, and you started to see it kind of rise back up. But you see by this kind of legend up here, the color-coded legend, you can see where most of the money went, right? It looks like blockchain service might have taken it. No, it looks like it was just chain right here, which is this color right here. And then you can see GameFi just, getting smaller and smaller, which makes sense. I mean, GameFi just hasn't really caught on, right? NFT, very, very small. I mean, January wasn't even existing, right? And then pretty much gone completely. So what does that mean? I feel like that means that retail wasn't interested at all in our space for a majority of 2025, right? And these institutions were the big capital that was pushing the space along, right? And does that continue, or do we become more attractive to retail? I think that's the big question heading into 2026. And hopefully, with this whole autonomous AI bot movement that's happening and innovation that's starting to take place, that retail does become attracted to our space a bit more and more as time goes on. But we do know that institutions will, because they're continually putting money and capital into our space. All right, let's see here. I got a couple more. All right, we got Stan here that says CZ's blaming tariffs and Eric Trump's blaming CZ. Who's right? Yeah. So I looked up the comment about Eric Trump blaming CZ about, saying, hey, look, if you're going to be blaming tariffs, then we got a problem. And I didn't see any like more substance to that. So I don't know if that's just more of a headline rumor or if it's, more of, just basically FUD trying to get put out and to be circulated. Right. But it was interesting that CZ did mention the tariffs very, very quickly, because I don't think that was a smart move by him. That is for sure. All right, what else we got in here? All right. Keep dropping them comments in there, guys, and I will get to them. All right. So this was interesting yesterday. This one, if you guys watched the Super Bowl, Coinbase actually was the only commercial that I saw yesterday, and it was pretty horrible. So Coinbase is another article here. It says Coinbase bets on Backstreet Boys nostalgia in return to Super Bowl. It says 4 years after its viral QR code advertisement, crypto exchange Coinbase has returned to the Super Bowl, this time betting on a Backstreet Boys karaoke-inspired ad. Coinbase's 1-minute TV spot during the most watched sporting event in the U.S. was mostly text animation that flashed the lyrics to the Backstreet Boys' 1997 hit, Everybody Backstreet's Back. So, like, everybody was talking about this on X yesterday as well. I felt like Coinbase pretty much was getting trolled the entire time. But I'm not sure what they were thinking, right? At the end of the day, my mind was kind of like, okay, I feel like they don't really care. They don't care about trying to necessarily make the crypto space attractive to the masses right now. We're in a bear market. Also, there's like infrastructure legislation happening. There's all this stuff that's already moving in the favor for centralized exchanges. And so to me, it just seemed like they did it because they felt like they had to, right? They had to at least be some sort of representation for crypto for the halftime commercials, but it was pretty lame. It was very just basic. And I think they were trying to be funny, but it didn't work. I don't think so. All right. Let me fix my screen there. All right. So let's see what's going to happen for Bitcoin here in the next 2 to 4, 6 hours. All right. You can see right here, the MACD looks like it's about to close up. And it looks like Bitcoin is trying to come out of this. But remember, when I showed you in this case, it would be higher time frames. And we'll get into that in a second. But it looks like it wants to come to the upside, right? But we've been kind of dancing around that $70,000 mark, $70,000 to $71,000 mark for the past 2 days, right? So we really need to get past that resistance level, right? And if we can get past that, then I'll say, okay, I think we're going to have a continuation to the upside. But, we could get back to that resistance level because it seems like we want to come out of this sell pressure, right? So the stochastics as well, we could see, this kind of curve back to the downside and then, drop back below and Bitcoin head back to 68,000. But as for right now, it seems like it wants to go a little bit higher, right? So wouldn't be shocked if we revisited that 70, 71,000, 71.5 to see if we can pass that resistance level. And I could see that happening actually later today. So that's what I got for the 1 hour. Let's take a look here at the 4. The 4 is kind of makes me feel a little bit opposite of what I just said, but that doesn't mean that, we can't come out of that 1 hour with some strength and then just this get extended for another candle or two on the 4 hour MACD here. So it's not really saying that it wants to come down aggressively. So, again, I could still see us get to that $71,000 mark. All right, let's get to the daily, which I kind of hit on earlier a little bit. Daily looks like it wants to come out. I'm not convinced yet that that's the move, because I need to see that hour chart really show some strength and then us get past that level of resistance. That's what's going to make me feel like the daily, we can get it out of the daily for Bitcoin. So that is what I am seeing for Bitcoin there. And then Ethereum, very similar situation. We talked about Ethereum already, but I will just very quickly hit on it for these timeframes that I go over price action on. Hour looks like very similar to Bitcoin, right? It wants to come out. Does it come out? That is the question. Resistance level for Ethereum is that 2150 mark there, right? So same thesis there. If we, I wouldn't be shocked if we get to 2100, 21.5, but for it to go higher continually, then I think we got to see it get to possibly like 2200, right? And break that resistance that the past couple of days it's been, held under. All right, let's take a look here at the 4 hour. Again, similar to Bitcoin on the 4 hour. Not convinced that it wants to shoot down and come out of buy pressure just yet. So the hour is really going to dictate this. And the same thing with the daily for Ethereum. Not convinced that it wants to come out just yet. But if we can break that resistance of 22 or 2150, get to 2200, I think that we can definitely see higher and come out of it the daily possibly. Or that is definitely a possibility there. All right, looking at the crypto bubbles in the alt market here, you can see majority of everything has pulled back in the alt market. You're seeing about a 90% pullback here with about a 10% push to the upside. You're seeing MakerDAO come up 31%. You're seeing Rain pushed up 15.3% here. Will5 getting pushed up 7%. So those are the kind of anomalies that are getting pushed to the upside here. And then, like I said, about 90% getting pushed down to the downside. Yo, Courtney Johnson, what is up? Courtney Johnson says, peace. What is up, Courtney Johnson? And then you got Stan says, with Vitalik slamming L2s, is this bullish for ETH or L2s? Honestly, I feel like he's had a little bit of mixed communication in regards to L2s. The first time that he came out with it was about a week and a half ago, I think. And I talked about it on the show. And he basically was saying that they're changing their strategy for scaling Ethereum layer 1, right? They're not going to rely on building this Ethereum layer 2 network or ecosystem to kind of like scale ETH layer 1. They're going to focus more on the actual aspects of Ethereum layer 1. Now, I know that there was a little bit more follow-up, and I think he just wants people to stop forking ETH layer 2s to create a new ETH layer 2, right? And that just happens so easily and so frequently that he wants there to be more substance to this Ethereum layer 1 and layer 2 ecosystem. So I think if you're just forking Ethereum layer 2 to have staking on there or something like that, and you're just going to be just another DeFi layer 2, then yeah, I don't think it's going to be good for you. So I think ETH layer 2s really need a strong use case and utility. And I think that's what he's getting at. Hopefully, Stan, that answered your question there. Poet Babe, what is up on Abstract. Yeah, she says, oh, I missed it. Yeah, I apologize. But if you have any questions, just drop them in the Abstract chat and I will get to those for sure. And then Stan says Telecoin. Let's see what's happening here on Telecoin. Telecoin. Where's Telecoin? Not in the top 1,000. I know what token you're talking about. I don't think it's called Telecoin though. It looks like the Telegram logo, I think. Let's see if it's in the top 200 here. Yeah, I don't see it, Stan. Maybe it's called something else. But you can see here in the top 200, 100 through 200, you can see that it's about 60% pull to the upside, right? With a slight, not slight, sorry. No, I would say it's about 40% pull to the upside with a 60% pull down to the downside. Oh, here it is. Here's the Telcoin is what it's called, Stan, by the way, TELCOIN. All right, Telcoin is down 3.3% on the day. But the tokens in the top 200 that are sticking out to me are AXS here pulling up 12.6%. You are seeing Audi pulling up about 12%, CCD pulling up 11.6%, All pulling up 8.4%. Then you have Kite pulling up 10.8%, Lombard up 4.4% as well. BMX up 4%, and majority of everything else is pulling back in the top 200, right? Some stuff that got hit kind of hard is KTA pulling back 11%, QRL pulling back 9.4%, SKR pulling back 7.6%, and Pulse X pulling back about 5% there, right? So Pippin is pulled back 3.5%. As you can see, the B meme coin on BSC pulling back about 5%. So, I mean, honestly, the top 200 doesn't look as bad as the top 100. Xtina says, what are your thoughts on BlackRock dumping their Bitcoin? I heard it's only 0.5% of their holdings, market manipulation. Yeah, so BlackRock doesn't dump like Bitcoin. It's just kind of like at the end of every day, you'll see like a final transaction amount and it's labeled BlackRock, but it's their clients or their accounts that are selling Bitcoin in the ETF, right? So they're just basically doing like a accounting situation, and it looks like it's all BlackRock that's dumping, but that's not the case. Unless BlackRock came out specifically and said, you know, we are dumping our Bitcoin that we hold, but it's all a bunch of their accounts accumulative together. All right, let's see what else we got here. All right, here is another news. So this is actually something that I've been talking about a bit. I knew that, you know, the banking system was going to just continually push back, right? And you can see here, this is an article by Cointelegraph, says crypto and bank Spar in comments on Fed skinny master accounts. This is very, very interesting, actually. I think this is very important for the future of centralized exchanges and just big crypto Web3 entities, right? You see here, it says the Federal Reserve has heard arguments from crypto companies and banking associations on a proposal to allow so-called skinny master accounts, which would give fintech firms limited access to the central bank's payment infrastructure. The Fed received 44 comments in response to its proposal, which closed on Friday, seeking feedback on offering a payment account, with crypto companies backing the idea and banks urging caution. In opening up comments on the proposal in December, Fed Governor Christopher Waller said the new payment accounts were needed due to rapid developments in payments and that they would support innovation while keeping the payment system safe. Payment accounts won't have the same privileges as master accounts commonly owned by big banks. They wouldn't earn interest or be given access to Fed credit and would have balanced limits. So that is kind of this is I think the banks and the banking system and network is very scared for the Fed to allow crypto entities in like this, and I think that's why they're pushing back, right? And you have Christopher Waller that is saying, hey, this needs to happen, but your legacy banking companies are I think they're terrified, right? But I mean, like, these crypto entities, they're not gonna enjoy the same benefits as the banks, right? They can't earn interest and they don't get access to the Fed credit. So, I can see why they're concerned, but the initial introduction to these crypto entities, they're not going to have the same benefits. I think the problem is kind of like the banks feel like this is a slippery slope. It's going to happen anyway, so it's inevitable. I think that the banks just need to accept this and try to work with the crypto entities. So this is something to continually pay attention to, I think, because this is going to be a part of like what happens with the Genius Act and how that gets played out. It says, in response to the proposal, stablecoin issuer Circle, which, by the way, is in tight with the banking system already in financial institutions, said in a letter that the accounts would play an important first step in carrying forward Congress' vision under the Genius Act, and argued they would materially strengthen U.S. payments, right? And so, yeah, I mean, you can check out the article. It is by Cointelegraph on their X account, but this is kind of the next phase of integration with the financial institutions, TradFi, and us. All right, this is kind of a warning here for if you are into where is it? I know I have this. Let me pull it up here. If you're into the autonomous bots situation here, just kind of a warning situation for you guys. Just be careful. So this is a report by Slowmist, and Slowmist is an auditing company. It says Slowmist reports supply chain poisoning in OpenClaw's ClawHub plugin center. Weak reviews allowed numerous malicious skills to infiltrate and spread harmful code. Core Security scanned 2,857 skills, identifying 341 malicious. Slowmist analyzed greater than 400 IOCs, revealing organized batch attacks targeting few fixed domains IPs via two-stage loading. And it says, what else we have here? It basically shows, like how these autonomous bots can, if you create like a social account with them, they can backdoor other people or yourself as well, right? And the auditing that's happening with these autonomous bots and the protocols that they create, they are being done by each other, right? So they're being done by other autonomous bots, and we don't know what the quality of auditing is at this moment with this industry. So I would say just be careful. Now, it is Slowmist, which is an auditing company, so you got to take it also with a grain of salt. You gotta go in and research yourself, much deeper on what that looks like, right? Like, what are these audits looking like? Whenever they do like a full audit report on protocols, and also there needs to be a standard too on these. So this is just something to be careful with, but also, this whole movement is moving so fast that you got to be careful. All right, let's get into some Bitcoin ecosystem stuff here. So one of the first things we're going to hit on here is a AI agent ordinals launchpad, and this was created by Mr. BRC. For the people out there that are familiar with the Bitcoin ecosystem, you are familiar with who he is, but he created a AI agent ordinals launchpad. It's actually at ordmaker.fun. And you can go there and check it out. It's supposed to be live today. And you can go to the launchpad, kind of see, what is launching. You can launch your own collection here and see what is up and coming. You can see right here, this one's a public launch by Yap World, 15,000 sats per mint. Looks like the progress is 14 out of the 75 right now. And then there's another one that's in the first come, first serve stage. and it's at 14 out of 80. So pretty cool stuff. This guy, Mr. BRC, really, really creative. I remember he would use ordinals and basically you use recursion to do some crazy stuff with ordinals in the past. And then you see a collection launched by Hype, which is a part of the Goosenals community there. It says breaking the first AI agent generated Bitcoin ordinals collection powered by OpenClaw. So he used OpenClaw to basically generate all of these art pieces that that is a part of this launch, right? So that's pretty cool. That, you know, and I feel like a lot of different ecosystems are utilizing Claude and this AI autonomous innovation, right? And so this is just another way to do that, right? And they brought it to Bitcoin and Bitcoin ordinals. And so we're seeing Solana utilize that. I'm sure we're going to start seeing Sui. We're going to start seeing a bunch of other areas as well. So really cool stuff by them. What else do we have in the Bitcoin ecosystem here? There was another update. Okay, so this is a post by Iman. He is one of the partners over at the Block Runner that covers the Bitcoin ecosystem. And he put this out. He says, we've been reaching out to Ordinals native creators over the last couple of days to invite them to nat.fun first creator seminar. So nat.fun, I've went over this on the channel multiple times on the live, as well as I created a Bitcoin ecosystem recording that you can check out on the OnChain Rev X account. But it says nat.fun is launching next month to revive NFT creation on Solana and Bitcoin by introducing modern crypto rails that enable fair distribution, sustainable creator earnings, and asymmetric upside for collectors, right? So if you are a creator in the Ordinals ecosystem, you basically have an opportunity here. I would reach out to Iman and see if you can be a part of the seminar, right? Basically, they're going to break down how this is all going to work. They have a creator playbook and basically how you can be a part of this ecosystem. It says if you didn't receive a DM but want to attend as well, just join the Discord. So join their Discord, be there at today. So it looks like 3 p.m. Central. So check it out, and you can check out this post if you go and follow Iman, and that is at Iman_blockrun there. And the last thing I got here on the docket is if you go to AI.com, and I do want to give credit to Sugar Girl. So at _Sugar Girl, she gives a lot of great updates in the crypto ecosystem as a general, right? But if you go to AI.com, and it says her post right here, it says, just claimed my handle on AI.com, owned by the founder of Crypto.com. So the founder of Crypto.com bought AI.com. It says your AI agent will be able to perform tasks for you. The domain was bought for $70 million. This guy bought this for $70 million. Oh my God, that's absolutely crazy. So I wonder if they've got some juicy plans for users. It says visit their site, sign in with your Google account, reserve your handle and that of your AI agent. So that's the interesting part. It says input card details to prove that you're a human, always not financial advice, do your own research. Absolutely. So you go to AI.com and then you hit start. And then you sign in with your Google account, which I already did this. And what's going to happen after you sign in with your Google account, it's going to give you two options. The first option is to create your own username for your human, right? And then you're going to create a username for your AI bot. So that's pretty cool that they're kind of, who knows what's going to happen with this, right? This is something that could be something, or it could be a nothing burger. But I decided that, and I apologize, I just realized I wasn't sharing my screen here. But if you go to AI.com, same thing, right? You just hit start and then you connect with your Google account, all that good stuff there. And you can sign up for the username there for you and your AI bot. But who knows what they're going to do with it, right? The founder of Crypto.com paid $70 million. They have to be doing something big for it. I imagine some sort of network, maybe a social network or something like that. So you can check that out. And just like Nat.fun, who knows? Do your own research, but it could be something big, right? And you can just reserve your handle there, just like you reserved. I showed you guys how to reserve your block on Nat.fun. But that is going to be the show for today, guys. I appreciate you guys supporting and coming into the chat and leaving comments and all that good stuff. I'll say it every single day. I know that there's been a lot of craziness happening with the show, and you guys still support the show, and I really, really appreciate that. I could never do the show without you guys and your support, and really, really appreciate that. Also, couldn't do it without my partners as well. If you are interested in that banner down there, go to pyro.buzz and you can bid on that space. Also, if you could visit merlinchain.io, you can head over there and learn about what they have got going on with their Bitcoin staking, right? You can head over to merlinchain.io and then you can go to stake and you can see there's 3 options. There's staking Bitcoin to earn more Bitcoin. Then you have staking Merlin. You have a day-to-day flexible and then a 6-month lockup bonded staking vault. But the Bitcoin staking period is a 3-month lockup period. You earn, I think, between 8 and 21% APR. And for the flexible day-to-day, it's 15% APR. You can claim your rewards every single day. And then for the bonded, it is a 6-month lockup period, but you earn 45% APR. Really cool stuff. You can learn about what they got going on, as well as they've been listed on Coinbase Perps and Spot and Perps on Kraken within the last 4 to 6 months, right? So really cool stuff there. Ooh. And if you are new to the show, I go live Monday through Friday from 10 a.m. to 11 a.m. Central Time. And that is the show. I appreciate you guys. And until tomorrow, peace.